Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Easynomics. On Easynomics today, we have a slightly different subject. It is about the economics of credit card usage, especially credit card usage that is done internationally. Now, obviously, not every credit card user travels overseas, but it's a significant issue because it has various implications. And joining me on that subject is one of the foremost experts in this business in tax and taxation law, Dinesh Kanabar, the Chief Executive Officer of Dhruva Advisors. Dinesh, very warm welcome. Thank you very much for joining us on this episode of Easynomics, where we'll try and decipher all the issues that have come up. And before we start, I just want to recount for our viewers that some data. Prime Minister Narendra Modi himself, in fact, had spoken about this, that only 15 million Indians pay income tax. However, more than double that number go abroad for business and tourism. And now we saw with the budget that this matter has been sort of taken into its hands by the government, by the RBI, and from July, viewers, Indian residents will have to pay 20% tax on international transactions done through credit card and several other impacts. So Dinesh, what really is the impact? We also saw a clarification come from the Finance Ministry. Please distill it for us and our audience.
So, Siddharth, thank you for having me on this show. There are two separate issues out here. First is the levy of TCS, or the collection of tax at source. And just to clarify to your viewers, that TCS is not really a tax, it's only a collection mechanism. So, when you spend money, that is an expenditure, it's not income of yours, but you also, in addition to spending the money, give the government tax collected at source, which is treated as an advance tax to be set off against either your advance tax liability, or if you don't have an advance tax liability, to claim as a tax paid in a refund claimed in your return of income. That's the first thing. Now, this is not a new law. The law has been around for some time, except that the rate has been enhanced from 5% to 20%, and one more change on credit card, and I'll just come to that in a moment. So the government, about a few years ago, came up with this entire proposition that if you are sending money overseas, then on that money which you remit, you have to pay a 5% TCS, which, as I said, you can set off either against your advance tax or or claim it as a refund. And the proposition was that this will give us an ability to track monies which are going overseas, so that when people claim the credit, we can sort of see whether it's tax paid money or not. The proposition was that people merely send money overseas, and then it's not an accounted money, and the government has no way of finding out whether that money is accounted or not. Apparently, it's government's belief that this 5% was not a sufficient deterrent for those people who were sending unaccounted money. And they said they took it, this 5%, as an extra incremental cost, which did not pinch their pocket. What the government did first in the budget was to go back and say that this rate of TCS will go up from 5% to 20% from 1st July, which means that any amount that you send out under LRS will be subjected to a 20% TCS, and that will be, of course, again, as I said, set off against advance tax or credited and claim a refund. What the government also did separately, which was not a part of the budget, was to say that the LRS limit of 250,000 would include monies spent on credit card. Thus far, there was a Rule 7 which exempted any money spent on credit card as outside the limit. So you could remit $250,000. In addition, you could spend money on your international credit card whenever you went overseas, or you bought things from India but purchased them overseas. So that was not regarded as a part of 250,000. Now the government has brought that within 250,000, and the proposition is that any monies which are sent abroad under LRS, other than for medical and education, will continue to attract 5%, others will be 20%. That's in sum and substance the change which has been brought about, Siddharth.
Okay, for the average viewer, is this an anti-evasion measure, or is this to kind of ensure that the revenue that the government feels may be getting lost is incorporated into the annual revenue stream of the government? What is the strategic intent behind this?
It is the strategic intent avowedly, and I don't think there can be any doubt on it, is anti-evasion, because the money which you pay comes back to you. However, let's assume that you are not accounting for your money and you are sending monies outside the country, then the government has at least collected 20% tax on those monies. And if you don't claim that as a refund, that goes to sort of augment the coffers of the government. But this is not a collection mechanism. The reason why there is an uproar today, Siddharth, is that you put a tracking mechanism. Once you have a tracking mechanism and if somebody has paid 5%, why do you not have the ability to go to that person's return of income and say you paid 5%, because everybody submits the permanent account number, and you go back and say that did you or did you not remit this money out of your tax paid monies or not? Why do you need to go all the way to 20%? And the government has been claiming that it does not have the mechanism to do the tracking. Now, if the government does not have the mechanism to do tracking, why should it be that an honest taxpayer has to suffer this liquidity crunch of 20%?
So the government's inability on perhaps data analysis and the ability to use technology to track taxpayers means that the baby has been thrown out with the bath water. Typical sledgehammer tactics of the government and the taxman. If you have to use a nail, hit the hammer on the head, not on the nail.
Absolutely agreed. And that's what the uproar is all about. That there will be sure dishonest taxpayers and you need to track them. And the 5% mechanism allows you to track them. Why do you want to put 20% tax on honest taxpayers? And this whole thing on credit cards, Siddharth, I must just make a perspective out here. So India has been convertible, partly convertible rupee on current account. So business current account transactions are totally freely remittable, monies are freely remittable, and on personal you can spend 250,000. India has got good foreign exchange reserves. We are moving towards as much convertibility as possible. Now you have reduced the 250,000 by the amount spent on credit card. Now you can go on talking debit card, credit card, all of that, but I think the key is really, should the government be more liberal or less liberal? That's one. And second, when you start putting credit card within the purview of LRS, the tracking mechanism becomes so very difficult, because you are saying that if you have a credit card and the money is spent for the purpose of business, that is outside the LRS limit. What is outside LRS limit cannot suffer TCS by government's own admission. Now, who's going to keep a track that when you spend money,
that's a good point. That's a good point about tracking. And Dinesh, for the benefit of our viewers, I want to do a sort of rapid fire, in the sense that I will try and throw some scenarios at you, and if you can explain, because these are the questions that people are asking us. For example, and I'm going to start with this bit straight away. There are a lot of students from India who go and study overseas, and their parents provide them money for monthly expenditure in various ways, including through the issue of an add-on card. Now that child uses that add-on card on various activities overseas, and obviously these cannot be very large sums of money. Aren't they inconvenienced?
So the government has clarified two things. First is that the amount which is sent overseas for the purpose of education is within the 5% limit and not 20%.
Sorry for interrupting you. How do we distinguish that? If you send, let's say, $1,000, that's a lot of money for an average student, and he uses something for fees, something for his travel, for food. How do you distinguish? After all the expenditure is for education.
Absolutely agreed, Siddharth. I was just coming to that. I was just completing my point. So a question was put to the government that if you're going overseas, and take a simple example, you're talking about $1,000 and where it has been spent. But on travel, you are saying 20%. But if I have traveled for medical purpose or education, what will happen? And the government strangely has come out with an answer to say that should be 5% and we'll come out with clarification on how to do that. I really do not know how will this happen, because it's so the purpose is education medical is a wider term, includes not only direct expenditure, includes even indirect. How will the government monitor and how will taxpayers really go by all of this is something which is unfathomable to me.
Will I be right in saying that 99.999% of the data that might be generated will be lying in the electronic version of dusty files that are found in government offices, despite the Narendra Modi government's attempts to throw out such dusty files? This is typical tax bureaucracy at work. A quick follow up on that point. $1,000 as an example. Does that $1,000 now go up for the parent who is sending that $1,000 to the child?
Yeah, it does, because when you make that $1,000 remittance, whether it is 5% or 20%, you have to pay extra. Therefore, your outgo from your pocket is going to be $1,000 plus either 5% or 20%, depending on the purpose for which you have sent it.
Okay, another scenario, and before I take that scenario, example of how our tax laws end up, and I say this responsibly, penalizing those who are taxpayers, because those who are outside the tax net, the government, the tax department really, to be very specific, does make attempts, but it ends up using the heavy hand of regulation on genuine taxpayers, as well as onerous amounts of tax. From the indirect tax side, there is an example, viewers, and Dinesh will agree with me on that, that you take insurance for health, for life, or for motor insurance, and you subscribe to a certain amount, and every year you pay a certain amount of money, and yet you have to pay an extremely high percentage of service tax on the annual premium. Imagine
GST,
a policy.
that's GST, which is now service tax is subsumed into GST. Yes, I agree.
Absolutely, I was making it simple for those who understand this. The goods and services tax is what covers it. It's the rate, and I have had people like the LIC chairman say on record on television that this is not a good measure at all. Nothing has changed, but scenario number 2, back to the subject where we started, and this is a real example which I underwent during international travel last year on official purposes. I had to use my credit card at a certain point because nothing else was working, and that was official expenditure of a certain amount related to travel right at the point of exit at an international airport. Now that amount that I spent, what happens? It was my personal card, but the expenditure is on behalf of the company. What happens in a scenario like this?
You're going to the heart of the matter, Siddharth. So the avowed proposition of the government is that business expenditure is not part of LRS. If it is not part of LRS, then it cannot be subjected to TCS. How will that be monitored? I don't see any answer at all coming, because the government is going to sort of come out with guidelines, and the bankers are supposed now to monitor, maybe take declarations from you, come back and say, this amount which you spent was for the purpose of business, therefore A, it is outside the $250,000 limit, and B, therefore TCS does not apply to it.
Okay, what happens to those very high income taxpayers above the 1 crore bracket plus, where you know that audit sort of process kicks in, where all records including of credit card spending have to be submitted as part of your tax return? Are people at that stage going to be hassled, or and second part of that question, Dinesh, will it also apply to those who may not be in that tax bracket and are well below it?
Yeah, so whether you are above a crore of rupees, above 5 crores where the maximum marginal rate kicks in, or you are far below it, the proposition is the same, that TCS has been paid. If you are liable to advance tax, which I would like to believe most people in business would be, then you can set off this money against the advance tax and pay a lower advance tax. Whether you can predict these amounts, not predict these amounts is a separate issue. But if you are liable to pay advance tax, you will compute the TCS amount as a reduction from your advance tax liability and pay the balance amount. So it doesn't really matter whether the government has record or no record. This amount is collected and to be offset against your tax liability. Simple as that.
Okay, that's a pretty clear explanation. Uh, I don't know if we have missed any other sort of unintended consequences from this move. If so, could you please explain that to our viewers before I move on to the next part of our conversation?
Yeah, just the last point I would make is that, when you make purchases, you would make purchases of goods, you would make purchases of services, etc. And when you're buying goods, you're going to sort of pay customs duty, whatever else. So are we making things so onerous that you are importing something because you are using your LRS amount, it is going under the residual category of any other remittance. You're going to pay 20%, you're going to pay customs duty. Where are we going to end up? And this is just making things very, very cumbersome, very, very difficult to monitor for everybody individually as well as the government. And I hope that the government does heed and sort of removes at least the credit card out of the LRS purview.
As an expert, one of India's foremost experts who has seen the entire evolution of our taxation architecture, direct tax, as well as the rest of the stuff, do you think the government needs to dial back on this and come up with a more rational set of measures where anti-evasion, and we can't argue against the taxman clamping down on evasion, where it's a balance, because it's going to make life tedious for a significant set of people?
Yeah. So, Siddharth, it's very simple. Anti-evasion is something which I would actually support 100%. The point is really a 5% was an anti-evasion measure, and then it's for the government to track and go back to the taxpayers' returns to say whether or not this was accounted. To just track it, you don't need 20%. There is a TCS, for example, on sale of cars. You have a small little thing, and thereafter the government can monitor whether the car was purchased from accounted money or not. To monitor, to be anti-avoidance, you don't need 20% TCS. 5% is absolutely sufficient.
Yeah, and I kind of get the sense that when you increase it 4 times, you are clearly also looking at it as a revenue measure, and at least I haven't seen data. Perhaps if you could dwell on it, whether the overall sum of transactions in value terms is significant enough, because credit cards as a total percentage are pretty minuscule, and within that, those that might be used for international are even lesser, Dinesh. I mean, those numbers are very, very small. So is there an eye that the taxman has on revenue, and they usually give out such numbers which in this case have not been given?
So there is some measure of expenditure available on foreign travel, and that's a larger number. And through the years, it has grown from 16% to 16 billion to 21 billion to now 24 billion. Now, if that's the money, $24 billion is the money which is spent on foreign travel, and you take 20% of it, the math is very simple. You're looking at $4 to $5 billion being collected. And that's the challenge. That's the challenge. You cannot be charging such monies because you might make travel totally unaffordable for people who really cannot wait to either set off that money against their advance tax liability or to get a refund at a later date.
So just, and I am repeating this point because this is clearly a headline number that I haven't seen in most reportage on this subject. What you are saying, give or take a few, is that the government stands to realize $4 to $5 billion on account of these changes?
So it will be actually 3/4 of that, because 5% was already there. Now we're moving to 20. But yes, you're very right. We are looking at numbers which are fairly astronomical. Just on one aspect, credit card spend, there is no really record. And while you may think it's small, I don't think it is small at all. We all travel overseas. We all use credit card. And again, this breakup of what's official, what is business, personal. It's going to be a big challenge monitoring all of that.
When I said insignificant, I kind of sort of on the numbers of total taxpayers, and I'm not even doing a per capita calculation for a population the size of India. I don't mean that. Okay. So I definitely have a headline here, and you are very clearly stating that a very significant amount of money, and depending on how you convert the rupee, uh, 25 to 30,000 crore additionally for government coffers, assuming that the level of usage remains the same, because like you said, if it becomes unaffordable, people might just stop using it.
Only one thing, Siddharth, is that it's not additional money. As I said, this is something which you can set off against advance tax, something which you can claim as a refund. So at least there's a cash flow, and then of course how that cash flow gets reversed, whether it is in the same year because of advance tax or in a later year because of refund, remains to be seen.
Absolutely, that point is well taken. But like you yourself said, that is also a cumbersome process. Many taxpayers have said this on record, that they would like to pay tax. It's just the rest of it, the procedures and the formalities. And my colleagues are sharing one bit of data which might be of interest for this conversation. The between April and February of the previous fiscal year, 11 months, Indians spent over 90,000 crore rupees on overseas travel. Now, obviously, there is no breakup as to how much of this went through credit cards, how much of it is a bulk of ticket bookings, for example, that you would have done with Indian travel portals and paid through your bank account or by check or
remember, Siddharth, that if you are making payment in rupees, on that there is no TCS. It's money that you send overseas or pay overseas for hotels, for whatever else, which is subjected to TCS. Rupee payments are not.
Absolutely. So that is absolutely clear. Viewers, if you are using a card that has been enabled for international usage, and while sitting in India, if you were to undertake a transaction of any sort where the billing is done in dollar terms, then definitely you get covered. But Dinesh, I have seen instances where the billing, for example, at Dubai, they give you the option of paying in rupees if you shop at Dubai. What happens in that scenario?
No, that's not right. It's not just Dubai. Wherever in the world you go, you have a choice of saying, would you like to pay in INR or in that foreign currency? Both of them are foreign currency. When you select INR, and you should never do that, the conversion happens at that local dealer's rate. Whereas if you say that I would like to be billed in my in a local currency, then in the foreign currency, then your banker will convert it and you will get a much better rate from your banker. But both are expenditure in foreign currency, both are covered.
I'm really glad that I asked you this question, because it is answers like this that are of real value. Viewers, we'll play this answer out separately for sure. Dinesh Kanabar saying don't select to pay in Indian rupees when you are overseas, because the conversion is happening at the local dealer rate and not at the bank rate when your invoice or the bill is raised finally, and that bit is squared off. That's a very important point. We've pretty much covered most of the things here, Dinesh Kanabar, and while there will be some concerns, very final point. Do you see the government, the taxman, stepping back and perhaps taking into account some of the feedback to make things easier? Is there a possibility?
Two parts to it. One is that when this proposal was put in the finance bill at the time of the budget, at the benefit of interacting with the revenue secretary, etc., and me and several others had raised this concern about TCS going from 5% to 20%. And the answer we got was that, look, you deal with the organized sector where bulk of the things are accounted. there is a part of the world which you are sort of blindsided, and to tackle that, we are putting this 5 to 20. So I think this is a decision which has been made, and I don't think that's going to change. What I do hope the government will reconsider and roll back is the inclusion of credit card as a part of LRS, and probably save that, because that's something which is really very, very difficult to implement.
All right, Dinesh Kanabar, that's a very important point, and we certainly would also hope that government takes into account the feedback that has come on this change. Thank you very much for your time and for that very detailed, elaborate explanation of the issues that are involved in this matter. Viewers, with that, it's a wrap on this episode of Easynomics. We'll be back with more. Do stay tuned in for other coverage that's coming up very shortly. Bye-bye.
If you like the video, do like, comment, share and subscribe.